Welcome, folks. This is an unusual one of our Start Smarts because we're going to spend some time talking about term sheets and negotiating a term sheet. So FJ and I are going to lead you through that. I'm David Lehman. I'm with K&L Gates, a partner there. Been there for more years than I care to count at all, even longer than started before Stephanie was working there. And I work with, I do corporate work. I work, a lot of my practice is working with startups from the very beginning till some kind of liquidity event, whether it be sale or otherwise. So that's what I do. And FJ, introduce yourself.
Thanks, David. Yeah, FJ Lucchino. I'm also a startup lawyer, and I'm a solo practitioner. So I work with lots of startups, lots of tech startups, both a lot of companies that spun out of Pitt and CMU, and do a wide range of things that, I like to say I do everything David does, just a lot cheaper, but, David and I also work together quite a bit as well. We have some joint clients, and but I've been doing this for over 2 decades, so happy to be here.
Yeah, it's been a pleasure. I've been working with FJ for a long time, lots of different capacities. What we're going to do is I'd like to do an overview of sort of negotiating. So I'll do that a little bit. Then then we're going to I'm going to quickly go over, introduce the fact pattern, and then we're going to go into 2 sessions. FJ will be the representing the company into which the company is seeking investment. I will represent the investor, and we'll talk about how to negotiate the term sheet, and then we'll come back together and negotiate the term sheet. Obviously, we won't be doing as much in-depth as FJ and I would typically do, but we'll try to hit the highlights so you can get some sense of the significant issues in the term sheet and the way the interaction would go, and maybe some of the things one would push back on. Questions before sometimes we don't spend enough time, I think, talking in these sessions about just the art of negotiating. So I thought it's worth doing that fairly quickly. And with your permission, I'm going to share my screen. Probably not very well, but I'll share my screen in a second. And hopefully you can see them. Can you see it?
Yes.
And so I put together what I call the top 10 negotiation tips. And maybe I can walk through those with you quickly. And one is don't rush. I find that sometimes when people are negotiating and you're actually having a conversation, you just sort of rush through it. And sometimes you need to let it sort of work its way through. You got to let people talk it out and hear what they have to say. Maybe it takes several sessions, but just let it play off. If you push too hard, you end up losing the negotiation. You'll watch a little bit of that this evening. Second is, and this is one of my pet peeves, which is to listen and really listen. And listen to the other side. And I find that if you listen to people and you understand what their concerns are and why they're asking what they're asking for, you can bridge the gap much better. FJ and I were involved in something about, Christ, I don't know how many years it was, but we were negotiating with another party, the licensed technology, and the principal on the other side was a firm believer in this. And he absolutely believed that if you kept working at it, you'd find that the differences were very small. I laugh because my litigator friends like to talk, and because they are of the view that they keep talking because it has 2 benefits. One is they convince the judge, and 2 is their adversaries aren't talking to the judge. I take the opposite when negotiating. As long as the other side's talking, 2 things are one half. I'm learning what their concerns are, and they might even concede. And that really takes me into item 2, which is not to talk over the other side. I have seen people sort of, including when they want to concede, they talk them out of it. I mean, they basically talk over them. So again, listen, understand. And the third one is to move on when you win a point. I have clients who have successfully talked themselves out of having won a point. So they'll win, the other side will agree, they'll keep talking, and they'll talk them out of it. So get a sensitivity to when you can just stop talking. Fourth, and this is the one we're not going to do very well here, which is prepare, prepare, and prepare. I think it's essential that when you're negotiating a term sheet and you're a lawyer and you are walking through it, you need to really understand and work your way through about what ifs and what's the other side going to say and what are my interests and really understand the choices, which you'll see here a little bit, and everything that goes into it. Communicating amongst yourselves, the team that's negotiating, making sure that you all know whose role, who's going to be doing what, who's going to be talking, what the concerns are, and who's going to be the spokesman, et cetera, is important. Number 6, consider the alternatives, and yours and those of the other parties. You know, any good negotiation, the best negotiation is when you have choices. And so, you know, when you're negotiating a term sheet, if FJ is negotiating on behalf of the company today with me, it would be best if he had choices. And those choices can be other term sheets with other investors. They can be go it alone. You know, I always tell people that are selling companies that the best position they can have is that they don't have to sell the company. Second best is to have various, you know, put it up to an auction so you have choices. So always plan for a plan B and make sure you know those choices and you're doing it so you can always walk away. The 7th point about taking into personalities is just something I've sort of watched over the years, which is not everything is rote, and people have personalities, and you got to figure that out and nose it out. I mean, we negotiated one not too long ago where I realized that after about 45 minutes, the principal on the other side lost patience, and so he would just get very rigid. And the longer we went, the more rigid he got. And so, you know, you take, if you can tell that sort of thing, that's good. Number 8 is to control the process. And that may be taking the shot at drafting, doing an issue list, doing an outline of the issues, but take control of the negotiating process so you're controlling it rather than the other side. Make sure you have the right people involved. So, you know, it's not much fun to have a whole negotiation and then find out that now they have to go back to the and now it has to go to the boss. No surprise there. And number 10 is a little counterintuitive, which is don't fight over the last crumb. If you're going to do something with somebody, you're going to be stuck with them for a while. You're typically this kind of a deal. And so if, you know, I've had people who sort of fought for the last nickel or the last little thing, largely for, you know, almost like it's the principle. And that's not really where you want to be. You want to negotiate with people in good faith in a way that you get to, they're comfortable, you're comfortable. And I just, you know, some things just aren't worth fighting about. Let me pause there. FJ, you want to add anything? Add color? Any other thoughts, complaints?
Yeah, sure. I was, when you said, David, communicate among yourselves, it reminded me of the fact that I know I've been on a number of negotiations on the same side as David, and David is a stickler, and it got more complicated with COVID, but David's a stickler for when we're having a negotiation by phone, that if at all possible, everybody be in the same room on one side, because the communication that can go on during a conference, and this was, of course, a different world when you had conference calls, and you were all sitting around, you know, a telephone, and they couldn't see you, but they could talk to you. There could be a lot of communication going on, and it also prevented people, or you could prevent people from saying something that they shouldn't be saying, or you could cut them off in a way that wasn't obvious, or you could go on mute and say, wait, we've got to, and then you could talk among yourselves. That's become a little more complicated in the Zoom world when so many of these things are done on Zoom. Although, of course, you can do breakout rooms and things like that if you need to talk among yourselves. But anyway, that was one that jumped out at me. That and David's number 4, prepare, prepare, and prepare. David is an excellent preparer for negotiations. And you know, and it pays off. So really being prepared and having someone on your team, everybody needs to prepare, but one person usually takes the lead in the preparation. And it really does make a difference when you're sitting there and you have certain facts at your fingertips, or you know the consequences of a certain, you know, concession that you might make when that could happen down the road at the time the agreement you're negotiating might be terminating or something, and knowing what those consequences are can really make a big difference.
Agreed. Okay. Other comments, questions? Thanks, Jay. All right, let's stop sharing. So this one, I'm going to share this. So we're going to go through it, and I'm not going to go through the term sheet. You'll do this in the room. And I don't know if you, it was actually, Kit, did we email them or have it make it available to folks who signed up, or what did we do with the term sheet? We did make it available. Right?
You sent it to be downloaded.
Good. Okay. So let me see if I can share it.
Yes, we could. Well, somebody
Okay.
can put it in chat too right now for
Good.
those who didn't download it, because you're going to need a copy, I think.
Here we go. Are you guys seeing it?
Yes.
Yeah.
Cool. So this is a term sheet that has been presented by the investor, that is my group, to the company called Ingenious Inc. Is a term sheet for a convertible debt. So that's, you know, as we know, that's debt that will be converted on the earlier of a sale transaction or the next round of financing. This term sheet has a cap, which we'll talk about, and it's a term sheet for, you know, between $250,000 and $500,000. It's being given to a company called Ingenious Inc. Yeah, that's a long story, but never mind. And Ingenious Inc. has two shareholders who are listed on here, Tim Stryker and Ralph Ryder, who own 75 and 25% of the stock. Tim sort of is the principal founder, and Ralph is sort of the programmer, if you will. So to give you some sense of who they are, and to give you some sense of this is a company that does bowling statistics, for what it's worth, not that you care, and a fast sort of, and it provides all these services to different bowling alleys. Which is, there's a long history behind that too. So and so this is again a term sheet that has been presented to the company, and has not been negotiated in any way, shape, or form. And so what we'll probably do is the company side will go off and think about the things that it wants to ask about and try to negotiate away from the investor. You know, you'll go through the highlights and hopefully in your group. Anything else anyone wants to know about before we divide up?
David, I'll make one comment. And this seems to be as good a place as any, which is, you know, in this scenario, the investor has provided this term sheet to the company, which is not uncommon, obviously, but at this stage for a company that maybe is doing its first real funding, and, you know, from anybody who's not friends and family, my preference, when I'm representing the company, is that, and I'm basically almost always representing the company, my preference is that the company drafts the term sheet for a convertible debt offering, because I think it enables us. I think that I found that it's tougher to do if you're doing like a preferred offering, a Series C or a Series A or something. Then it's typically coming from the investors, particularly if it's a VC investor. But at this stage, with this amount of money, a maximum of $500,000, I'd prefer to be doing the drafting, because I could put some better terms in here that I could start with compared to this. So I mean, just saying that, if your company is going to be doing a convertible debt round, you might want to think about getting out in front and trying to get a term sheet in front of investors, because you'll have plenty of investors, in my experience, particularly if they're angels, who will work with that. Some may not, but in my experience, a good number of them will. And one other thing I might say is a prefatory comment is we're doing a convertible note, which I've done plenty of those, but I've come around. I prefer a SAFE if I'm representing the company. Simple agreement for future equity, which is a Y Combinator form, started as a Y Combinator form more than a decade ago, and has some better terms that we can talk about. Some of the, maybe in passing, it doesn't have a maturity date and doesn't usually bear interest. So just as an aside, we're not negotiating a SAFE, we're negotiating a convertible note, but I think a SAFE is usually a better deal for the company as opposed to the investor. So for what that's worth.
Okay. And for the very reasons that he articulates is why I, as the investor, submitted a term sheet for the note as opposed to the SAFE. Yeah, right. But I agree with you, FJ. If you're the company, a SAFE would be better, and you certainly want to get out there with a term sheet first if you can. 100%. All right, let me stop sharing. The SAFE.
Yeah, the nervousness and sacrificial
Did you
lamb
tell by the
quality.
look on my face?
Yeah. That's a look
He's
of
smiling,
relief.
so
That's a look of relief. All right, well.
We were thinking of disappearing and then just having Jess tell you that we had another option, another company.
Yeah,
we want.
Really?
You got by, you got till 7:00 p.m. to either sign it or we're moving on.
Okay. So Aaron, just start. Just say,
Okay,
we looked at
jump
the
in.
term sheet and here's what we want.
Okay, all right. Well, David, thank you. We did look at the term sheet and certainly appreciate your interest. There were a number of terms that we did want to go over, and we'd like to suggest some adjustments too that I think will serve both parties well. I think one of the biggest things that I'd say overall is we want to make sure there's a good balance between sort of the return that you're seeking, but then also I think the incentives for me and my team as we move forward. And as we kind of look at that, sort of striking the right balance. So I'll start from the top. I'm not sure that's the right way to do it, but I'll do that. So I think the first thing was looking at the interest rate. Even understanding that sort of inflation is what it is. In terms of how it impacts the sort of the math of the deal. We thought that something that closer to 5% would be reasonable as opposed to 10%. So interested as to sort of your thoughts there, and sort of what you see in terms of other deals as well. I think our understanding is from a benchmark standpoint that 5% is a little bit more typical.
So, out of character for a moment. What I would typically say at this point is, I'd like to hear all your comments at the thing before I respond to any of them. I'd like to understand all the issues so I can put them in a box, and then we can talk about them in sort of together, right?
Yeah.
And so I would usually not go along with this kind of that way. I think give me everything.
Okay.
But I'm going to do that little part because I understand your 5%. That's an economic issue. Let me hear what other economic issues you have, which is what other pricing things are we going to try to change here as well? Because it's a package.
Yeah, absolutely. Yeah, that makes sense. So let's go through those pieces. So the next one I would say is looking at the valuation cap. So that at 2 million, we feel is low. And so we'd like that to be 5 million. And so that is the next term that we'd like to look at there. The next one in terms of the economics of the deal, I'd say the conversion discount. That also seems low. So we'd be looking for 80% there, or a 0.8 factor. And
And I think on the valuation cap, we'd like the $5 million be the pre-money valuation cap, not a post-money valuation cap.
thank you, FJ.
Give it a bonus.
Let me just make
What
sure
about
I've got all the
majority
financial
rate?
terms done. There.
Oh, that's probably a
I
good,
think when it comes to economics, those are the main.
Yeah,
so, that's helpful. Thank you for for bearing with me and going through all of it. As you know, the 5% is intended to, it's not, I mean, it's not really reflective of, it really reflects the risk associated with your business. And you are sort of risky, right? New business, et cetera. And so I'm not sure, I mean, I heard you say that you think 5% is market and that kind of thing. I'm not sure that I agree with that. My sense of market is it's a little higher than 5%. And as you also pointed out in your introduction, the market's not going to, I mean, the market's going, I think that one can agree that the market's going up at the moment. So, but I take your point about the 10% and versus 5%. So I'll come back to you in a moment. The $5 million, how did you come up with a $5 million cap?
that was from talking to other peers with similar businesses, and just understanding sort of what they negotiated recently, just companies in our network.
Mm-hmm. So again, you're at a very, very low, a very early stage, and that would, I mean, if you take your rough numbers, right? If we took the full $500,000, that's 10% of the company at your stage, right? For $5 million pre-money valuation, not quite, but something like that, which seems kind of for the risk that we're taking, again, not quite equivalent to the risk we're taking, right? So that given the very early stage of your business, and the discount of so let me suggest this to you as a package. I've consulted with my partners in the last minute, the last 10 seconds, and authorized to come back with this with you, which is that we'll move the interest rate to 7%, make it and I should say on the pre-money, post-money valuation, I think we feel pretty firm about it being the way it is, because we want to know we got a fixed percentage of the company. So I don't want to be diluted for the rest of the the rest of the money you take on, convertible debt, et cetera. I want to know what I'm getting. So I feel pretty firmly about the way that it is on that side of it. Let me just look at one thing here. So yeah, so I'd like to keep that the way it is. I think we can go to but I think $5 million is a little high. So let's I think we can go to $3.5 million valuation, a 20% discount, and a 7% interest rate.
Okay.
And that's a package. And frankly, I never say sort of take it or leave it, but that's probably as far that's what we can do.
Well, can we walk through all the rest of the issues and we'll get back to you on your package, David?
Sure.
Expand the deal.
Yep.
Okay.
Okay, great.
But so to step back, when FJ and I do it, we often do a package, and especially when you're talking about economics, because they do bear with each other, right? I mean, there's the interest rate bears on the cap versus the rest of it.
Right. Yeah. That's what I was thinking. That especially in thinking about the cap and the discount, and kind of how those all pull together, and
Yep.
then think about what the impact is going to be, as it flows through in terms of what's left over for the founders.
Yep.
Seems to make sense.
Just one comment. I mean, if I were actually negotiating with this, and I would have, Aaron, you and I would have spoken at more length about what we would accept, and if this were something we liked. I said that in part because, of David's comment earlier, but I might just, I might just say, yeah, well, I'm going to accept that package, and let's just get that one. If that's acceptable to us, maybe we take that and move on. It really depends on the situation and also how much you've talked to it about your client. So, you can always defer, but if you can sort of put that one in the win column, maybe you just do that. It depends. This is
Yeah. And is that particularly true around the sort of financial side of the deal? As you go through some of the other terms and the timing, and so some of those pieces, if you can't bridge some of those gaps, it might be tough anyway, to get a deal done regardless of the financials.
So we could do a little side thing here with Lisa and Mike, your co-founders, and just ask, what do we think of the package? Are we thumbs up, or we want to hold?
I would go thumbs up on the 7%. I would go on the financial package, but there are many of the other areas that I want changed.
Yeah, well, we're only agreeing on those three things.
Okay, I agree on those things.
Okay, Mike?
Mike?
Yeah, well, one of the things that is kind of missing in this exercise, understanding the company itself, or at least some sort of risk profile, and how confident the founders are on future revenue, et cetera. Because this package is all based on what is a future projection and how much time do we need, which of course we can't get into all those details. But I mean, this sounds fair, but if I am fairly confident in the company, I might be pushing back a little bit harder on some of these terms. But it all depends on, I mean, it's a moonshot, or are we fairly confident in that, we're going to see steady growth? And I just kind of, for this exercise, maybe I'd like to know that.
Well, so the fact pattern that I know of these people is this is not a moonshot. This is there's not a huge amount of additional technology. As I mentioned, this is basically technology to grow the company into a SaaS model kind of thing from what was which is just licensing kind of, or basically a service business. And so the money's being used to both market and develop and software development. So there's no technology risk, if you will. This is a growth play. How's that?
Yeah,
so whether you'll be able to grow it, who knows? Especially with this, with the limited management team that you have, and the limited experience that they have, which goes to the risk, which means I was probably too generous in my package. But there's no technology risk, if you will.
Yeah, and
no regulatory risk. But Mike, your comments well taken.
And David, in the introduction, you commented on this, but I'll just point it out here. The other factor is, how much money do you have left? How badly do you, and what are your other sources of capital? If your runway is ending in a month, if you got a month of runway or 3 months of burn left, that's very different from, you feel like you can go for a year like this and you can turn this down. So that's a huge part of it that we just.
Good point. Yep.
Okay, Aaron, back to
What's next?
no.
Okay.
Otherwise, it's okay. Otherwise, it's acceptable.
I like to personally. I'm with the terms too.
Okay,
Yeah.
thumbs up. Okay.
Yeah.
All
We'll
right.
take it and move on. Yeah. Okay. So, some of the other specifics around the deal, that I'd like to run through is the maturity date. As you know, we do have a lot of building to do to take the services business to become a software business. And, so as opposed to, really 18 months of runway there, we prefer for that to be closer to 5 years.
For 5 years. So how are we going to get to 5 years?
In what sense? In terms of
Which is to say, what do you think that the runway for the company is? If we get the full $500,000, how long is that going to get you? Because what I wanted, this maturity date should be, in my view, as the investor, some period of time beyond which you're going to need some. The real goal is to convert when you get to some real money, right? The real financing.
right?
And so, when do you think you're going to need that additional financing? And we can target it over there. When I looked at your projections, this is about when I thought it makes sense. Because if you're going to need money about then, because you're going to hire people and you're going to start growing. So December, so you can quibble, but basically that's how I came up with that time period.
Sure. Yeah. And, I think the projections are, sort of what we're obviously shooting for. It doesn't take into account every risk that we could encounter. And so, we don't want to be in a position of, being under duress if we don't hit that exactly. And so that's where we're looking for, for a longer runway there, to be able to account for some of those things that we can't necessarily foresee, but, also I think, sort of leads down the road of, we may not know the exact path of, and timing as to when we get there, but, also knowing that we're on the same page in terms of what we think the company can become, but thinking that, sort of having some additional time to make sure that we get to that point, for that additional financing round, in a way that's advantageous to us both. We think that long term would make sense.
Of course, Aaron, we can always extend it. So if we get to it, we can always modify it and extend it if we need to, right? So we can agree today that it'll be, December 31st, 2024. And if you're having other kinds of issues you're talking about, obviously we both want to succeed. So so we can come back to it and talk about it at that point and extend.
No, that's not acceptable. We're not going to agree to that. It's only 15 months.
Yeah.
Or actually, no, I guess 21 months. But, it's, no, we need to be able to have more time than that. We don't want to be in a position where, because we're running out of cash, we're in a difficult position, and we need to be able to not have that pressure, have that hanging on over our head as we're moving forward. Things always take longer than you expect. It's just the nature of these things. And so we don't want to have to run back to you in 18 months because we know it's 3 months away and start having another negotiation with you. So we need to be able to know that we've got more time, because things do take more time.
Okay. Well, why don't we plan on? I mean, so I get the point. So why don't we give it another 18 months beyond December 31st, 2024?
Great.
18, 20.
Takes us to 2026.
Yeah.
Cool.
So this is when we would put it on mute and the team would get together and discuss this. Yeah.
Right.
Or we take it under advisement and discuss at the end. Yes, but you're right. For these purposes, I think maybe we just, given we've got less than 10 minutes.
Yep. All right, got it.
We say yes, but yes, you're right, kid. That's what we think.
All right.
Mike,
Next.
are nodding and thumbsing up. All right, good. One of the other things is just the closing date seems to be a little tight. So we'd like another 3 to 6 months there, just to make sure that we have time to get that done.
You want to extend the closing date?
Mhm.
Oh, interesting.
Or at least have the right to unilaterally extend the closing date. Because we don't want to have a closing on 300,000 and get to the end and then find, well, we want more time to negotiate. We want more time to raise some more money.
Well, that's, I mean, this is non-binding, so I'm good. I mean, I would have thought that you guys would want to close this as soon as possible. So to get going.
As soon as possible, even if you have the extra time.
We do, but we want some additional time because things always take longer than expected.
Would we be better off in being able to unilaterally
Yeah,
Um,
I mean, that's fine. I mean, I think we want to be able to unilaterally extend the closing date. That's basically what we want.
Or three, with the limit.
Um,
At
well,
least,
that's fine, but just so we're on the same page, the exclusivity will be the same.
well, that's, so, yeah, well, I'll let Aaron speak, but.
Because you're not going to take a long period of time and then shop my term sheet. We're not doing that, and I'm going to be out spending time and energy when I can be with other potential companies. So if you want to extend it, pick your date, but the exclusivity goes the same period of time.
Well, no, we can't do that. Exclusivity is too long as it is.
Well, I mean, I'm not going to spend money on this, or spend time on this, unless you're going to agree to pay all the legal fees like it says here.
No, we're not gonna do that either.
So I'm going to spend time on this. You're not going to be exclusive, and we're going to go on and on.
No, how much time do you need? You've already.
I'm ready.
Term sheet, you're serious. Why do you need, how much more time do you need?
Well,
What do you-
you're the one that wants to extend the closing date.
Well, put it this way, if you're gonna put up the full 500,000, we don't need to extend the closing date. How much are you willing to commit as the lead investor?
Yeah, we're gonna commit to like for at least 125.
And you
Well,
have
that's because
minimum.
well, that's what I mean. So we're gonna commit to, I thought you had other investors lined up. All right, I'll tell you what. I'll see if I can get the full minimum.
Okay.
If I can get
500K.
if I can get the full minimum,
250 is the minimum.
then we'll leave it on June 30. We'll delete the exclusivity, and you can pay my legal fees.
No,
No.
no, if you can come up with if you're gonna commit to the full 500, then.
No, 250. I just said
Well,
250.
then how are we supposed to, if we have an exclusivity with you, how are we supposed to raise other money?
Well, obviously you can. Yes, I mean you can talk. You can obviously you can
Talk to other
talk to other
investors.
people about our term sheet. Yes, obviously that will be an exception to the exclusivity.
Right, and it does say that in there, to be
Yeah.
fair, but, yeah. So you're gonna give us, we have 3 months, what about if we make it 2 months? So that you're gonna decide by the end of May, whether you're gonna do this or not. And the exclusivity will match that. And then beyond that, if we haven't raised, if there's still room left in the round, if you haven't taken the entire round, then we have the right to go out and raise more money for another 3 months.
If we haven't closed in the first round.
No, if you haven't fully closed the round, if we've closed on the 250.
Yeah.
Then the exclusivity should just go away at that point.
It will go away. Yeah, and once we close it, it goes away from the
Right.
first round.
So the exclusive, so you're gonna close, so we make it 2 months to close. And the exclusivity matches. And then, yeah, I think we make it 2 months. But we have the right to continue to raise until the round, so we don't have to end the round. We have more time to continue to raise after the round.
Sure.
After the
That's
first
it.
close.
Yeah, that's fine. That's
Okay.
fine. See, so stepping out of character, that's exactly the kind of discussion that when you get yourselves, if you talk about it long enough, you understand what the concerns really are, and you understand that his concern is that the sort of the initial raise versus being able to continue raising the exclusivity, and until you talk it out and you find they're actually not that far apart.
Yeah, and also being out of character, knowing how much, it wasn't clear, knowing how much the lead investor is putting in is, to me, very fact.
Yep.
Because if they say, yeah, we're gonna put in 250, or they're putting the whole 500, that is a big difference between that and saying we're gonna do 125. So you need to know what they're talking about. And then give yourself some room to work from there.
Yeah.
All right, and I do want my
Let's do
legal
that.
fees paid. I do want my legal fees paid, by the way.
Well.
Not at your
it-
rate, David.
What's
I
that?
can't afford.
Not at
David.
your rate.
Well, we'll pay, if we close on, if we close on the minimum, we'll pay you one counsel for you as the lead investor. And we're gonna cap it at $10,000.
How much?
10,000.
That
No,
doesn't
he's
even
putting in
cover this
250.
meeting.
Actually, that's fine. Because you're gonna do, because I'm gonna make you do all the work. All right, let's go. Next. All right, next issue, because I know we're gonna run out of time.
So a couple of other things that are important to us. The board seat, sort of for especially if you're only investing at the minimum, we can offer you an observer role as opposed to a board seat there. And then also on the reverse vesting, that's something that we don't typically see for a seed round, and not something that we would be willing to accept at this point in our, sort of where we are as a company, and obviously where we as founders and the people who brought this far and want to take it further, want to make sure that that's in line and continues to incent us appropriately.
So Aaron, I'm confused. I put my money in, and then tomorrow you quit. You own 75% of the company. What happens?
No,
You dissolve the company to get most of your money back. If it happens tomorrow.
There won't be any money to get back. Right. But yeah, but you'll have spent my money. So what do I do? I now have a company where you own, not involved, the founder's not involved in the company, owns most of the stock of the company. And I've just put, $250,000 or $500,000 into it.
And you don't look at Aaron. Doesn't he look like an earnest, hardworking, honest guy who's going to be working very hard to make something? And this is his dream, David. This is what he wants to do with his life. He's not going to just walk away right after getting your $250,000. He's going to be.
I know.
David, you heard during the pitch that I bleed bowling analytics, right?
I know that, and I appreciate that. But facts change, and you know what, Aaron, I'm not saying anything negative about you. I have all the respect for you and the universe. That's why I'm doing this, right? Because I believe in you. But facts change. Things happen. People. You get another opportunity with Google or something else, and you can't turn it down. Your personal life changes. I mean, through no fault of your own, and nothing evil or bad or ill intentioned, the world changes. And I can't allow my investors to invest in a company in which you walk away from it for whatever reason, good or otherwise, and you own the bulk of the company. I just can't.
This is debt. So if he walks away and he's vested or not vested, you're going to get your money back. If there's anything to get back, you're going to get back first.
It's people, right? So he should. I mean, I can't have a situation where I'm not going to. I don't want to go through foreclosure to go foreclose on it. What I want to do is go bring somebody else in to run this company and have the same kind of incentive. And it goes to Aaron's original speech to me at the very beginning, where he says you want a proper balance between the people that are going to drive it and the investment, and get the proper balance. That's what I'm trying to achieve. So, and I take the point that you've done some work up to this, but I do think that there should be some vesting. And frankly, your point already, there will be vesting. The next, if you are successful in raising another round, it will help attract additional capital because you already have this vesting arrangement in place. So while I'm suggesting you have to do it eventually anyways, I'm suggesting you do it now. We'll have a portion vested now and a portion vested over time.
So we didn't work out what that portion is, but yeah, okay.
Right. So that's that discussion.
Mike,
And on the board seat, I only just finished it up with the board seat. You all need some professional board. It's just you guys at the moment. I'm happy to get off of this board when it's appropriate, which is when you get the next round or something like that, and we can decide whether it's appropriate for me to be on this board. But at this moment, I want to see at the table.
Well, David, I guess that brings up another question that one of our advisors, I think we'd all like answered, which is, in addition to, in addition to your checkbook, what else are you bringing to our business? Sort of beyond that.
Well, as you know, one of our investors has some relationships in the industry. So obviously we'll bring those connections, hopefully. But at the end of the day, it is about money. And we are bringing a checkbook. So, I mean, we will do what we can to enhance it, to help our investment, that's for sure. And we'll make connections as we can. And we'll try to make you successful. But at the end of the day, it is about the money.
So doesn't that undercut your argument that you need to be on the board?
No, because again, it's business sense, and I personally have run other businesses and done other things, and so I can bring that kind of a business advice to this. Frankly, you guys, don't have that much background. I mean, you know a whole lot about this bowling, but not so much about running businesses.
And I'm going to step out of character here. I mean, this really is. You will have already thought about this and whether you think this is a good. I mean, yeah, you maybe should or shouldn't take their money if they're not a good fit, but if you really like this person, if you think they do add value, you may be very happy to have them on your board, then, potentially. Or you may feel like, look, we really need this money and this wouldn't be our first choice, but we're running out of cash. So we're going to take this person's cash, but we're not going to put that person on the board. I mean, those are sort of two extremes, and the reality may be somewhere in the middle there, but.
And I'll give you one other caution, which is the observer role. That sounds very inexpensive and easy to give. I have experienced where they have taken over the room. And even though they don't have a vote, if you have the wrong personality sitting there or a certain person, they will actually take over the room. You wouldn't believe they don't have a vote because they're driving the thing. So even if you say, even when you say, we'll give you a non-vote, an observer role, you want to know who that is and what that's going to be, because I have seen observers just drive it.
It is not a non-speaking role.
It is not a non-speaking role. Correct. Yeah. I mean, so just be careful on that observer thing. You want to
5 minutes maximum.
Yeah.
Pardon? What's that?
5 minutes max.
Yeah.
Yep.
So if you let them on the board, the three of you are already on there too, you have not lost control.
Correct.
So it's a 3-1. So this sounds like, and actually, I think, David, as we've checked out his credentials, he seems very agreeable, and I think he can bring some value.
There you go.
There you go. You can pay me later.
All right. Thank you. All right. And you're okay with the reverse vesting if we agree on the vesting concept?
I think that's a provision that I'm not comfortable with. And Mike, Lisa, what do you think on the reverse vesting? Since you contributed into this business so significantly as well.
I think that I understand the concern. So I think that the vesting period should match the maturation date of the convertible note. That way we're all in the same boat together for the same amount of time. And that by the end of when it does convert, then, there's no risk, or there's lessened risk that we're going to jump ship before it converts over.
All right.
So I
think we went 18 months beyond.
18 beyond the December 31st, 24. So we're talking about mid 26.
3 years.
3 years.
And then we would 100% vest at that time.
That would be my preference.
Yep. So either that date or the date of the significant
Yeah, I'm okay with that.
transaction.
I'm okay with that.
Okay.
Now, the reason I'm okay for that for the group is that by then, shorter than that, we'll get some financing, which you'll have to revest it anyways. And if this thing's going to go bust, it's going to go bust long before then. And so I'll get what I'm going to try to accomplish, and you'll get revested again when the VCs come. So they'll accomplish both. Right?
Yeah.
FJ, what do you think?
Candidly, I would just, I've got to jump because I'm late for.
Yeah, I'm sorry. Yep.
I would, for 500,000 raise, I would be pushing hard not to have any vesting. Because we are going to have to, most likely at the third round, you're going to have to vest anyway. They're going to force that upon you. So I'd rather avoid it at this stage. You probably already had it to begin with. To me, I don't usually negotiate it at a convertible note. I mean, David may have a different experience, but at this stage, I don't usually see myself negotiating that point. That's an aside. It was helpful to negotiate it for this purpose.
All right, I know you need to jump. Any other final comments, questions before?
Well, what if we do half? We keep half of what we already have.
Well, that's what I was going to.
I'm going to drop.
Yep, okay, go.
Thank
Thanks,
you.
FJ.
Sorry to leave a little early.
Thank you.
Yeah, good.
Jay.
Thanks, FJ.
FJ, great. Thank you.
Thank you, FJ.
Yeah, I would typically vest like more like 25% or something up front with 75% vesting over time.
Okay.
I mean, I'm not negotiating. That's what I would usually come out. And this is all over the board. And FJ's point is well taken. I just think that people are getting angels are getting more sophisticated, and they're imposing this more than they did a few years ago, like the cap. So that's why it's in the term sheet.
Okay. So let's just real quickly, because I'm looking at the time here. Thank you all for hanging in. So we had information rights, assignment, amendments, and amendments are the last three.
Yep. So for information rights, I think we're fine with that, other than the requirement that the financial statements be audited. That's a significant cost, and will take money out of what we're trying to build for the business. So it's one that we'd like to avoid at this stage. In terms of amendment rights, would like to change that to be subject to approval by a majority of the note holders, just so we're not any of us aren't held hostage by any one particular note holder, to the detriment of the whole. And then on an assignment, on the assignment clause, would also like to make that subject to company approval, just to make sure that sort of our investors, we obviously want to invest with you and your group, for very specific reasons. And we don't want to end up in a position where we inadvertently end up with a different set of investors and misalignment there.
Mm-hmm. So on the information rights on the audit, yeah, that's an over, just to cut through, because that's an overreach on this term sheet. It should not be forcing you to do an audit. It can so I would concede that immediately. On the amendment, it's a fair point. Sometimes the lead will say okay, but it's got to be a majority and the lead, including the lead. So so if the lead only has like 40%, then it'll be a majority that has to include the lead. So the lead is part of that. It's the way that would typically work out. And on the what was the other one? Amendment?
The assignment.
Oh, the assignment. Interesting. On the investor side, people don't love not to be able to assign it, but your point is very well taken. So certainly I can assign it to affiliates. I should be able to do that. More estate planning kind of purposes. But otherwise, that's probably okay.
Okay. I have to say, I've been doing this for a long time. I've had a lot of groups, and even though this is a small number, this was actually, Aaron, you did a great job.
You did.
I think that this well done, and I think you got the principle.
Acting classes before this.
What you were negotiating. So.
Yeah, nicely done. Really nicely done.
Thanks.
All right.
Okay. So our last one is that the panel 10 mistake? They're worst mistake.
Yes, which I'm trying to put the panel together, but hopefully I will by then. Cool.
That one's also fun. It's funny too. So it's a you get to hear the other side. worst clients in the world. Sorry, no,
Yep.
before they got them. Yeah.
This is,
Okay.
but do
Sorry.
we do that before or after you do the choosing the lawyer thing? No, never mind. I'm good. Cool. All right.
Okay. Well,
Hey,
thank you.
thanks,
all.
Steve.